Well, hello, you trader nerds. Welcome on this wacky Wednesday. Glad you're all here and wonderful to have so many traders with us. Real traders never trade alone. They trade with their fellow nerds like Austin and Shane and DB and DMT and Don and Glenn and Hal and Jason and Jim and Mikey and Mo and Raging Bull and Robert and Stefan and Stephen and Thomas and Tim and Trader Nick and Vicky Feldman. Welcome, ladies and gentlemen. Here we are. And I'll tell you what, I've been dreaming about black swans and black swan hedges and sweet bobby hedges and the whole 9 yards, and I am at peace. I really am. I sit there today and I go, you know what? Nuclear war doesn't scare me now. Well, I guess it should scare me. I mean, it doesn't scare me about Ukraine and Russia. It doesn't scare me about Israel, and it doesn't scare me about Hamas and Hezbollah and Iran and all those places. And all of a sudden, it feels kind of good, because you're like, hey, I'm not worried about it anymore as far as what the market goes. Now, of course, I've got money in the S&P 500 just sitting there. So, well, I guess what we're doing is a hedge to that. So, anyway, it's pretty interesting. I've been doing a lot of reading and a lot of different studying on this, and I think I like what we're doing. I like what we're doing. We got a little sell off today, 0.66% down on the day, which is, you sit there and go, does that do anything to our hedges? Probably not. We'll check it out just to make sure, but it probably doesn't really do anything to our hedges, but we'll check it out, see what it is. So down 0.65%. Now, if you have already started your tranche of the 1220, today is the day that you can go ahead and sell those three, but don't sell them until you analyze it on your analysis features, either here or on Tasty, to make sure that you've got an adequate hedge to the downside. The worst thing for us to do is to be able to have these hedges on and then not have adequate hedges when the event comes. So anyway, I thought it was kind of neat like this. Mark Schmitznagel said something to this effect, and I don't know. Let's just make up a piano song. He said it's kind of like you go every day and you cannot play chopsticks. You just can't play it. And then all of a sudden, you're able on the day of the crash to play Beethoven's Fifth Symphony, so to speak. That's kind of what we are. We sit here every day and we just kind of sputter, 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 sputter. We're not able to play chopsticks, but one day we're going to make very, very, very beautiful music. The day is coming. Now, it doesn't mean that I'm totally done with the 111s and 112s. I'm just taking a break. I am taking a break. I'm seeing if we can do what they say can't be done and seeing if we can get on a free hedge. So it'll be interesting to see. And that's what we're doing. That's what we're trying. I wanted to look really quick like at the Skew driver. We've not, some of you that are new have not seen the Skew driver, but Skew driver tells us if we think there's an impending down move on the market. And what you do is you take 20 wide SPX, and this hooks up to, if anyone wants this spreadsheet, let me know. This is our Skew driver, and you select the option that is 30 days away in SPX. And basically, we want to see where the one trading at 5.2 dollars is, how far away it is from the money. And you'll see that right now, the $5.20 20 wide point spread is about 50 points away from the money. So what we do is we'll go over here on a little trend line, and it's 50. It doesn't look much at all. So what we'll do is come over here and let's do this. Let's do, today is we haven't looked at this since 7/12. How about that? So it was at 45. Today is 8/28/24, and it is 50 away. Now, how come that didn't do that? It's supposed to do my little things there. Oh, let's see. Let me do this. There we go. And let me do this here to get my formula right. There. All right. So normally this thing is between 25 and 35 is normal range. And so what this tells us is just where the skew is at in the market. And the closer it gets up here to this red line, the more pending doom would come. Now, I looked at it. I used the on demand feature of Thinkorswim a while ago to see if And we can do that again, I guess. Let's see if we can do that. Let's go to on demand. And let's see if this thing told us maybe a week out that there was an impending thing coming on. Let's see, August 2nd was that Friday, but that week was a tumultuous week, right? So let's go and let's do um, let's do sooner that week. Let's see if we went to July the 29th, because that week started going down. Let's see if there was any tail in the market on this. So let's go over to the trade tab, and I'll show you how to use this little thing. It's pre-buffering. Let it pull up the stuff here. Probably taking a while going back in time. But what you do is you go back and you go to SPX and you look at 30 days out. So it had a 30-day one there. And then you go, let me show you how to do this. You go deep and wide and 1 month, 4 strikes vertical. And then you're looking for, and hopefully it's going to show us the data here. It doesn't show us the data, does it? It's still pre-buffering here. Hold on a second. Pre-buffering, let it pull up the strikes. But what we wanted to do is basically see where the 20-point wide strike was going for an ask of $5.20. Come on, give us the information. Well, we'll wait on that and see if it'll pre-buffer and give us the data there. But I wanted to see if there was any tail in the market. So probably what we need to do now that I have basically converted my little fund into a black swan fund, I probably need to check on this a little bit more often and see. Let's see if we can change this to the 30th. Let's see, June the 30th or July the 30th, go. See if we can get some data here. All right, so then we had a 30 layer. Pull in the data stuff, pull in the data. Anyway, while we're doing that, let's go to, let's see, the big green monster won't be the big green monster then, will it? No, because, well, let's get out of this thing. It's not showing me the data that I want. Hold on 1 second. Let's go back to trade. Yeah, that's fine. Let's get out of on demand. I said let's get off of on demand. There we go. Now let's go back to the chart and see if our chart is fixing up. Give it a second to get back to where it was. There we go. Now let's look at our big green monster. Looks like we're a little oversold today. Let's go to ES. A little oversold today. And so we would anticipate that we may spend some time in here filling some of these gaps, but we still anticipate, as long as we're oversold, that we still believe that the dominant thesis is a rise up to the 56.91. Now, a lot will have, it isn't NVIDIA's earnings, that's after the market today, right? It was not before market. Y'all know? I think it's after the market. And I think that's what everybody's been waiting on. So we'll see. That should move the market. Yeah, it's after, Stephen. Thank you. So NVIDIA, I don't expect the market to do anything much today until NVIDIA reports, and then we'll see a catalyst one way or the other. What you can see, though, is we are consolidating into a little ball and tightly wound. You see this tightly wound, and contraction leads to expansion. And we had expansion, 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 and then we have contraction and lower volume. You see all the volume up here that was up here, and then we've kind of gone down into a lower volume area. So what's going to happen is we are going to have a really big move one way or the other, up or down. If I had my thoughts, I would assume, I'm presuming that the market is going to continue the move ahead. But we shall see. It easily could go down. It really could easily go down, but it's getting really tightly wound here in this tight little range, and then contraction leads to further expansion. So that's kind of what we're going to see there. All right. So we've got our Skew driver. If everybody wants that, I think it's already, I posted this in the thing, but we'll just keep a look at it here. And basically, if this thing gets really low, then you can pretty much say that a drop is imminent in the market. But this is pretty normal. Really nothing to see here on the Skew. Let's save that. And like I say, we'll probably start looking at that a little bit more often. All right, let's see how our little accounts do. And remember, we're going to play chopsticks every day and not going to see much movement in our net lick. And then one day we're going to play Beethoven's Fifth, which is going to be really, really nice. So let's see what our little thing is here today. So we are at 75, 977.40. So no much change at all, down $5.75, even on a 0.6% down move. And let's see our theta and data, delta, and all of that good stuff. Our theta and our delta is -2, -24, -2, -24. So about the same. You would think we'd be losing $24 a day on those options. And the VIX, let's see what our little friend VIX is in the 16 handle. So that's up a little bit from yesterday. It was in the 15 handle, 16 handle. And I would think that our buying power is remaining pretty much the same. Let's go over here and move this to the 28 and go to cap requirement and refresh it. Okay. I will log in if I can remember my password. And we are at, yeah, 1118, same thing. 1118, same thing. All right, only using 1.47% of our buying power. Now, let's see where our GTC order is. Let's see where our GTC is. Let's go here and look at our activity. And our activity, we're still at 45 cents. I'm so desperate, not desperate, but I'm so ready to harvest those 12 so that I'll have a very, very nice hedge to the downside. Now, it's getting close. Even this is not too far off, the $1.55 and the $2.55. This one is a long way from happening. So we're just waiting on GTC orders to happen. Now, you could, I'm a little nervous about it. I was basically saying that I may put on a diagonal every week. I could see it, especially on a down day like today, that I might could do a down day diagonal and put on a -3 out maybe 120 days and then buy 5 maybe in at 90 days or so. But I'm just cautious. I don't want to be left holding the bag on these things. If price were to keep going down and we're not able to get these things filled. But it looks like we'll get this one filled within 2 weeks. And how do you know? That's how you got to figure out. Well, all you got to do is go, okay, the 2650s at 56 days. Okay, so go to your option chain. Remember the 2650s, and you can kind of tell how long it will take. 2650s, let's see, ES. I'll show you how to figure out how long it's going to take those things to do. So 2650s at 50, I think it said 56 days. I guess it's 51 days. Let me see. Activity. 50, 69 days, 56 days. Well, let's see. Trade. There should be a 56 day here. Anyway, let's go to the 47 days and see what the 2650s are. 2650s don't have 2650s, but if you did, you see the 2700s are going for about 20 cents. So you would think that within, if we're at 56 days, 47 days, within 9 days or so, we should be down to that 20-cent mark where we can be able to harvest those. So if you're kind of planning on, when should I put more things in, and that's going to make our hedge look really good. What's this, y'all? Risk analysis. Make sure we got everything done here. And this was 24,000 yesterday, but when we harvest those 12, baby, yeah, baby, we're going to look really, really good. And nice having about 47 days left on that one actually says 51 days here. So that other thing just hadn't updated yet. So 51 days here. So probably within 4 days, 4 or 5 days, we should be able to clip those off at 20 cents and have the nice hedge to the downside. Isn't that cool? Now, what would it look like if we did do a 5-3 today? What would that look like? I don't know. What do y'all think? Do it or not do it? I'm trying to think. We got $23,000 worth of protection. what would it look like if we were to do 3-5? Yeah, probably give us a little bit more protection, but I think I'm going to hold off. I think I'm going to do this. I think I'll be more apt to do another 3-5 diagonal like we did this one. Like, let's see how this one's working. Let's do without this. Yeah, this still has a little beef in it, right? It's still got $5,200. Problem is, look, if we had a drop like we had the other day, 4% in a up move of 40 points in the VIX, then this isn't even a hedge. It's only if it were down 20% looking at the actual crash. So these diagonals, this is why I don't like them as much as the regular good old thing here. We really like having this in the same expiration. So anyway, any questions at all? Everybody good? Anybody following me and kind of doing this? Kind of interesting, isn't it? To be not having to worry about the market crashing. It's kind of fun. Anyway, y'all have a good one. I appreciate you. Love you to pieces. And I will see y'all tomorrow.